So recently, I have an investor who asked me this question. Edith, it doesn't make sense to invest in properties because whatever that I'm paying the bank, which is in terms of the mortgage servicing, it is higher than the rent that I'm going to receive because interest rate is not going to return to the 1%. Interest rate is still, to be honest, a little bit on the high side, and I need to top up, after I receive the rent. Welcome to Talking Shop with PropertyBank. I'm Edith, and today we're going to dive into a hot topic for property investors: the impact of interest rates on property investment, especially for non-residential property. So just a week ago, US Federal Reserve has announced a 50 bips cut on interest rate, and that caused a ripple effect to the world and definitely has an impact on Singapore. The first thing that I would think of is our deposits in the bank. So interest is going to dive lower. And of course, as with whatever deposits you are putting in the banks, you collect a much lesser interest rate. And this, for a lot of businesses, it will actually thrive the businesses because businesses will have some borrowings, and that means the interest rate that they are paying is lesser, and that helps in a way. And what about properties? That's where we are going to talk more about it. So interest rates, in fact, play a very big role in determining the cost of borrowing, which in turn impacts on the property values. And when interest rate is low, borrowing becomes cheaper. And that means to say that if you are currently borrowing for your properties, whether be it residential or non-residential, and if it is time for repricing, don't forget the dates, quickly engage a banker or even talk to any of the mortgage brokers about it and have a strategic repricing in place. So if you are now having your residential mortgage, well, it's really time to make sure all bankers come to you or you go to them, because with lesser number of new launches, or rather I would call them major new launches, are in fact quite limited in the market right now. There's a lack of such new launches, which is generally the big business for all banks. So with banks having lesser business from the new launch market, resale market is definitely something that they look into. So residential mortgage borrowers, you can definitely make sure that you get a very attractive rates and get the bankers to compete for your business. Now, let's also jump in to talk about the other sectors, which is the non-residential properties. So we will have the, top of the mind, which is of course the office sector. So office sector, if you look at it right now, whatever sizing, which means that the corporation, they in fact, because of hybrid work, they go downsize a little bit. So, or some are actually very major. We've seen one corporation which leases whole building. The whole building is about 8-9 floors, and they are giving up like 3 floors, and that's really substantial. So we see that impact to mean that with them giving up 3 floors, for the tenants, they are in for a treat because they can then save on renovation. But to the landlord, which is also still borrowing on this, if the contract is already fixed, there's no impact to the landlord. But with this, it also means that the whole market will be like rippled in the sense that, with the major corporations taking lesser space, office properties that the landlords are still borrowing, despite the interest rate drop, if they cannot find a tenant, it can be disastrous to them. And that also means you, as a new investor, or you haven't invested in office yet, there are opportunities as the landlords who may not sustain the borrowing will start to price it more realistically in the market, because no tenants mean, they can't pay for their mortgage sometimes. That means you are in also for a treat, because then you can buy office property at more reasonable prices. And for industrial properties, as you would know that some of these industrial properties are what we call the light industrial properties, which almost look a little bit like, office environment. And those are still doing well because many of these corporations or even, local companies, when they move outside CBD, they will actually cascade down to near MRT business spaces. And with that impact, I would say that the light industrial segment continues to be strong. And however, if you as a landlord, future landlord, when you look at the interest costs coming down and you decide to invest in a property, light industrial kind of property may be a really suitable ones because they are actually at a mid-range level where probably you can get that kind of tenants who's cascading down outside of CBD, and those that are already in this light industrial sector. So means to say that it is quite safe if you want to be a landlord investing because of the low interest rate right now. You get it because light industrial is quite safe to have a tenant there. Next, coming to retail. So retail is actually the most visible to investors like us, shoppers like us, because on the street we'll see them. So I think recently, if you have been going around, you see a lot of Chinese brands in Singapore. And if you are even also in HDB shop houses, which of course can be like in 3 million kind of budget or 3 to 5 million kind of budget, well, you know that it is going to get robust. So with this interest rate that is more palatable for investors, right? This is something that you can consider, which is the HDB shop houses. And of course, if you are running your shop and you've been paying your landlords for years and years, I think it's really a time that you should talk to us right now because if the interest rate, there's some adjustment, and if you can clear your mortgage, your credibility, I would say that business owners, especially the F&B retailers, don't work for the landlords. Come and talk to us. So recently, I have an investor who asked me this question. Edith, it doesn't make sense to invest in properties because whatever that I'm paying the bank, which is in terms of the mortgage servicing, it is higher than the rent that I'm going to receive because interest rate is not going to return to the 1%. Interest rate is still, to be honest, a little bit on the high side, and I need to top up, after I receive the rent. I'm subsidizing the tenant. So that was the message sent across. So what this investor is telling me is a cash flow. Basically, he's talking about, I need to top up, but let me ask you, this glass here is 20%. So we imagine that you actually can borrow up to 80% loan. So your 20%, which you put in terms of your cash aside to invest in a property, is in this glass. Every month, the tenant will pay the part mortgage because needs to pay the rental, right? So the tenant will also contribute to this cup. And this ultimately is 100% when you should decide to exit. Now I'm saying that you don't even get a sense of increase for your capital appreciation. So if you have more increase in your capital appreciation, right, this cup can be even 120% full. Yeah. So now look at it. What is the point that I'm trying to draw at talking to this investor? He's just thinking plainly about cash flow. Whereas for me as a property investor, I'm thinking of the cup full with water because every month the tenant who pays me, it is actually into this cup that I service less mortgage. So the top up is perhaps sometimes necessary, but look at it, you have a cup full as you exit the market. So now I hope this will give you some pointers that property investment, when you actually play on leverage, you're just putting aside 20% cash. The rest can be serviced by the tenant if it is similar, or in terms of the mortgage versus the rent, or you can top up, but this cup is going to be yours. But today, if I ask you to invest in stocks and shares, you're actually having to put your 100%. Yes, the amount may be little, but you have to put your 100% to invest such that you get your dividends and all that. So that tells you the difference. And of course, one good piece of news for investors is that because of the interest rate cuts, I think it's good news to the REITs. So if you are staying invested in REITs, you're going to be also a happy investor. But don't forget the 1 cup full that I'm sharing with you this time round for the property investors. So I want you to be a 1 cup full investor. Yeah, whether it takes like 10 years, 20 years, where you service your loan and you have a sitting tenant. Most important is the sitting tenant. So I'm Edith from PropertyBank. And if you have any doubts about, staying invested, talk to us. So our WhatsApp number 8333-1338. And if you really like our contents, please give us a like, subscribe to our channel if you haven't had, and stay connected. Bank on us for property.